Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Saturday, September 7th, 7:50 p.m. Eastern Time, coming to you with the Revere weekend walkthrough. Recording this in the evening and going to get it out tomorrow morning. So, as usual, let's look at the trend gauge. It's not looking the best. Obviously, we have the market leaders in a bearish downtrend. Short term, the 21 EMA is acting as resistance and sloping down. Medium term, we are seeing some relative strength in the RSP, which is the S&P 500 equal weight, and the Dow Jones. And then long term, we still have the green arrow there. So definitely a lot to unpack. So let's get started. So I'm going to start with the inter-asset correlation and just kind of see what we're looking at heading into the week. So basically Friday, we had that harsh break against the 50-day, and this 21-day is acting as resistance. So for now, this is clearly in a short-term downtrend, and obviously 5,500 is a key level I would like to see reclaim. And then obviously, if we really get down, this 200-day would need to hold. If we zoom out to the weekly, one level that to key in on this week is this 53.85. That's the 21-week moving average. And as you can see, we held it here, undercut and reclaimed it on that August 5th correction, which led to a nice little bounce. And we're coming back into it again. And, in a powerful trend that should always hold. If you look back in history, that is often a pretty good reference guide for bull markets. So good level 53.85 to mark on your charts. RSP. So it's good to see this holding up better. This is kind of just now pulling back into this top of the base 170 level would be great to hold. You have this 50-day right below. So if this undercuts and reclaims 170, that'd be good for the market and breadth. But we've seen kind of destruction in the big cap tech. So other areas of the market are doing a little bit better. IBD 50. So I added this in here just to show. Now this isn't all the stocks that we traffic in, but we are a growth stock shop. So seeing this break the 200-day, that's not a good indication of an environment that is, easy dollar environment. So if this can get back above the 200-day, that'd be good, but not a good look. QQQ obviously showing more relative weakness. This 450 spot was a pretty big level, right? This was the base breakout spot earlier this year. Sliced it on Friday, now coming into the 200-day. So pretty oversold here. It's almost 10% off the highs. So could start to see a mean reversion next week. But, overall, it's pretty weak. And then you can see just right coming into that 40-week moving average, 444.53 is the level, and that's definitely a key level to hold if tech is going to continue higher. You can see it held there, undercut there in August, and here Dow Jones, only could hold up for so long, seeing a double top short set up here, falling through to the downside. We'll see how it acts at the 50-day, and this 40,000 level is the big spot. Filling this gap here, but as long as it can hold above 40,000, hold the 50-day, Dow looks like it's in good shape. Mid caps, this small mid just getting crushed as well with tech breaking the 50-day on volume. So we'll see if this can, get a relief. But if these things start to get a relief, you should watch, if they start to come up into this 50-day, that's usually the easiest spot to short. So if that happens, that would be something we're watching. Russell 2000, again, big break of the 50-day. If we look at the weekly, sitting right on the 21 week. So for Russell 2000, that's 2088. And if this can hold this level, that'd be really positive for small caps. Otherwise, you have the 40-week below. And then, this 2030 spot is a key support to watch as well. The VIX, seen that elevated volatility, and, this is living back above 20. And this keeps going higher, it's just gonna make it a tougher environment. The dollar had that strong rally right into the 21 rejected, but is still kind of putting a higher low. And we've mentioned some of the research we use. This is an extremely crowded short. So wouldn't be surprised to see this kind of rally back up. And then gold has been hanging in here, but as we know, this isn't the best sector to buy in strength. Kind of stalling here, and could be a case for too tight, too long, looking a little bit wedgy. And if this breaks the 21-day, shorting gold wouldn't be the worst idea. Pretty low risk trade. You can use Dust, which is a levered ETF, but that's just a trade idea, especially with the dollar putting in a higher low, like I just mentioned, and that extreme positioning. GDX showing a lot weaker, breaking the 50-day on volume. Silver, much weaker than gold. This is, another lower high and confirming to the downside. Bitcoin, super ugly. For a while, it was looking relatively constructive in this base, and there was a lot of natural volatility that happens in a multi-week base, but now this is really sliding to the downside, and that Bitcoin halving cycle is not playing out like everyone expected. It, almost was a case of too good to be true, and everyone was talking about how the halving cycle is super bullish, while the market always tries to fool the masses, and that's what we're seeing here. And I can just show you some of the best proxies. Coin is, this is like 8 days down in a row. You look at the weekly, breaking a huge weekly range back below all moving averages. So definitely risk off here. And then micro strategies, another one sitting right at the 200-day. So not the best look for the sector. And one way to play it is SBIT. And as you can see, this is had a strong day on Friday, up 10%. PNB bonds breaking out here. TLT as well looks pretty good, but it is putting a reversal off this 100 level on Friday. Overall, it looks good. Could just be natural reaction, build another higher low underneath this 100 for higher. But one thing to note is this undercut and reclaim for rates, 30-year, and then TNX as well. Undercut and reclaim here. So that's something to watch as well. So that's some inter-asset correlation. I wanted to go over quite a few breadth charts because a lot of them are flashing some oversold indicators. So first one, this is the NAMO. This is the NASDAQ McClellan oscillator. And as you can see, when this starts to get pretty low, firm below the zero line, the market obviously is weak. But look, when this starts to get, below minus 55 and into 70, that can sometimes signal a short-term bounce. And you can see August 5th, which was the low on the S&P. I have the S&P chart below. This hit negative 74, and we got that relief rally. And now we're getting down here as well. So something to watch. These are getting pretty oversold. NASI, this is the NASDAQ McClellan Summation Index, and you can see right when this RSI got to 70, it started rolling over. It's indicators on the sell signal itself and back below that 10 EMA. And usually the best trading environments for growth stocks is when this is trending up. And when you start to see this RSI get super oversold, that's when you really want to be looking for constructive charts and leaders because, we use that phrase all the time, beach balls underwater, but stocks holding up the best when the market's super oversold. That's when you get that great swing trading environment where you can really capture multi-day, multi-week moves. But right now it's just simply not that environment. There's too much volatility. The market isn't in a position to just trend to the upside meaningfully higher with lower volatility. S&P 500% of stocks above moving averages. This is another one of my favorites. And really just mixed signals here. This is in mid-range, so these have room lower. The percent of stocks above the 20-day, still 47 are above, and you really start to see panic when this gets below 20, and that's often a good time, like I just mentioned, to look for leaders. And here it got to 30, and that we saw that bounce, but these still have room to the downside and shows that some stocks still if the indexes continue lower, have room down. This is the NASDAQ composite, percent of stocks above the 20, 50, and 200. Again, similar story. This is weaker as this is on already 10% off the highs, but percent of stocks above the 20-day is at 33%. So if you start getting back down into the 16 area below 20, sometimes can mark short-term bottoms, and August 5th is a good example. This hit 17 and led to a nice rally off the lows. Put call ratio. This is another one that can be useful, and it's getting back up there. August 5th, this hit 1.28. So if we see a huge move up over 1.2, that is another, these are all secondary indicators, so take them with a grain of salt. But that is another potential bottoming signal. And then another one that I like is this is the S&P infotech stocks above the 5-day. And this really shows how oversold we are. August 5th readings was, about 2. And now we're at lows. So this is the 5-day moving average is an ultra short-term moving average. So you could kind of say up here, there's FOMO. You shouldn't really be looking to load up on names. Down here is, you can play the contrarian a little bit. And then another thing I like to sometimes use is the Bollinger Bands. That's the lever. Let's do FNGS. This is the FANG sitting at the daily lower Bollinger Band. We'll look at QQQ sitting right at the lower Bollinger Band. SOX, semiconductors sitting at the lower Bollinger Band. So, these sectors are a bit oversold. Oversold can get more oversold, but just kind of pointing out where these are in the cycle. So if these rally back up, it could be, a short setup, or, if these build a higher low here and start to craft out, and we see stock setups, that would be positive for the market. And then this is another thing. This is percent of large cap stocks above the moving averages. So at a glance here, you can see where the money's been flowing, right? S&P 500 consumer staples, 58% are still above the 5-day, and 82% are above the 20-day. Real estate holding up really well. Utilities holding up really well, but not the sectors that we prefer. Infotech, right? Huge red. S&P red. Consumer discretionary, pretty red, and energy, which has been killed, 0 stocks above the 5-day moving average. So, always an interesting way to look at it. And then I wanted to bring up some anchored VWAP. So August 5th was a key turning point for the market, and the QQQ is breaking that anchored VWAP. I've got one anchored from the October low. So this is about 427. That's another spot that, you never know. That's in play. IWM breaking the August 5th low anchored VWAP. This is the October low one, is about 197. And then SPY sitting right at it. So showing subtle signs of relative strength, but we'll see if this can hold going into next week. So that's some breath. I'm going to get back into some charts, but I thought this was a great tweet by Larry Tentarelli this weekend. He said, buying a dip means buying shallow pullbacks over rising moving averages. And then buying into charts that have rolled over into a downtrend isn't buying the dip, it's buying a downtrend. So something to keep in mind is when you're scanning charts this weekend, there's a difference between a pullback versus a full-on correction, and you don't want to be the one trying to catch the falling knife. All right. So I've got some sectors to start with. Regional banks. This is holding up relatively well. It's 54.50 spot. It's kind of the previous left side peak, pulling back into there, coincides with the 50-day. So if this can undercut and reclaim, get back above that 21, that'd be a positive look for the sector. Biotech is breaking the 50-day, but this 93.95 level, that's pretty key support. Obviously, hundreds resistance, but this can, bounce here and get back above the 50-day. I still think this looks pretty good. Insurance, like I mentioned, a lot of the boring sectors have been the ones. This one's pulling back to the 21. Industrials holding up better, pulling back to the 50-day. Utilities, minor pullback, but again, this relative strength line tells you the money, it's been clear. The money's been flowing out of tech into these sectors. Gold, which I mentioned. Healthcare, another strong one that's holding up. This 148 breakout level is a big spot. So based on the trend, you would expect dips for this sector to get bought. Staples, again, expect dips to get bought as these are in uptrends. And then real estate, again, strong uptrend, relative strength line up to the right side of the chart. Expect dips to get bought there. And then ITB, this is home builders. This one's hanging in there. It's closing right at the 21. So kind of make or break spot. If it loses that plus this 116, that, the 50 days in play down here, but has been holding up. And you look at some stocks like Toll Brothers, KBH, those are holding up pretty well. So definitely if the market starts to bounce, these are some go-to sectors. All right, so I've got a broad list of stocks today, just kind of my general watch list, just going to talk through them. Obviously not all of them are actionable, but just going to kind of review them. IoT, super notable on Friday, gapped up into new highs on earnings, had volume, 400% earnings surprise. This looks good. And, if this consolidates a little bit, this would be a beach ball underwater, super strong. Palantir added to the S&P 500 after the close and up 8%. So we'll see if this can continue, but it's not always a bullish thing. Don mentioned in the Friday video, CrowdStrike, KKR, those had negative reactions. So it will be interesting to watch, but nevertheless, this chart's been holding up great. GEV, probably one of the best looking actionable setups heading into next week, but you always got to be cognizant of sometimes in a weak tape, relative strength can be an illusion and they're just going to eventually get hit as well. But if this can take out 200 on volume, this looks great. And look at this relative strength line into new highs. Axon had that strong earnings gap. Now it's got a pretty clear downtrend line sitting right at the 21, but this looks good if it can crack this downtrend line on volume. And one thing to note, that high volume close 350 spot, it undercut and reclaimed. So good action there. AppLovin pulling back to the 50-day, must hold. NVIDIA, so obviously it's, rolling over hard, below the 50-day, 21's below the 50-day. Some levels to watch, 97, this is that previous base, and then this high volume close area right here. If it can reclaim that, that'd be positive, could lead to a bounce, but then obviously you're running into moving averages. So best case scenarios, builds a higher low or, just rejects and moves lower. Affirm, still somewhat on the radar, held the low, that earnings gap. We'll see if it can U-turn around. Jefferies Financials, this stock has been really nice, trending up to the right side. This is pulling back to the 50-day, so see if this can hold. And they say on that tweet, this is a pullback for this stock. This isn't a correction. That's kind of what you want to be focusing on and relative strength. Like SMCI, like this isn't a pullback. This is a full-blown downtrend. So there's a key difference there. Shark Ninja, this is pulling back to the 8. This one's really strong. So we'll see if it can get supported or build a new base, but it is at that profit zone. And, more times than not, you see stocks cool down from there. Uber sitting right at the 200-day / 50-day. This is definitely a must-hold spot for this stock, but really after this run, it has done nothing. Can argue this is dub bond base, but honestly, it is looking a bit like distribution, so we'll see. This is clear secure, pulling back to the 21. This has been one of the best earnings gaps of the quarter. ServiceNow pulling back to the 21. This has got a bit of a base on base pattern, and I'm still under the camp that, the stock is being held down by weakness in tech, but if the NASDAQ starts to bounce, expectation would be for this one to lead because it's one of the few tech stocks that are hanging right under highs. And This relative strength line looks good, but it is just consolidating. So if this can break out, you'd see this really jump back up. Doximity, this is another earnings gap holding up pretty well. So one to watch. It's got a pretty clear downtrend line there. AMT, this is a REIT. There has been a lot of relative strength in REITs, you can see based on the industry group ranking, but this is holding up right under highs. DOCN, DigitalOcean, pulling back, reclaim the 21 day. So anything above the 21 / the 8 is definitely showing relative strength. CBOE, this is CBOE Global Markets, and this is another financial name, strong industry group, flagging right under highs here. Roblox, interesting to see a growth stock like this, like Roblox, holding up super well. This is forming a pretty nice flag here. And yeah, if growth starts to bounce, this one could be a nice breakout candidate. Kava, clear relative strength, pulled back, tested this gap low, held, and now it's consolidating. Wouldn't be surprised if this base is a little bit set up for the next leg higher, but especially with the weaker restaurants group, you have Sweetgreen's rolling over, Texas Roadhouse is rolling over, Wingstop. So this is kind of the top name in the group holding up well. Owen pulling back pretty orderly to the 21 day / the top of the base. This one looks really good heading into next week. FTNT, the best cybersecurity stock, and this pulling back, little 3-day down flag here. This is starting to give an opportunity after that strong earnings gap. Best Buy, another earnings gap holding the low, and this is kind of flagging a little bit, looks pretty good. And two's ISRG, this is pulling back to the 50-day, still building higher lows, so not a bad risk to reward here. Costco, another one sitting right at the 21 day, and then Eli Lilly, kind of, at that pivot 20%, or it was almost like too tight for too long, a little bit wedgy, pulling back to the 50-day. For a big liquid stock like this, you'd really want to see this hold. So yeah, that was a big list, but just kind of wanted to talk through a fair amount of stocks as the market's pretty volatile right now. So it's definitely a good time to find what's holding up, and so you can be ready if the environment starts to get better. One thing I wanted to talk about too is looking at the previous leaders of the cycle, and they're all in stage 4 declines pretty much. ANF, this was a huge winner, and now you can just see lower high after lower high, and then that 50 days rolling over, and this is in danger of losing the 200 day. And then ELF, this is another one. This one got smoked on Friday, down 10%, and this is in a stage 4 decline. The days for this stock look finished, at least for the midterm. And then SMCI, which I've mentioned before. And then one strong stock this year in 2023, this stemmed off that earnings gap. And now this is kind of starting to roll over, losing the 50-day, 2 days of heavy selling pressure to the downside. So maybe this rallies back up off the 50-day, but looking like it's a bit in trouble here. And then I wanted to talk about some of the big tech. Microsoft's losing the 200-day, not a good look. And you can see these all kind of had head and shoulder distribution patterns, and now they're rolling over. So, still a higher low off here so far, but this has really got to start to bounce soon, or else it's kind of susceptible to like waterfalls. Google, this is another one breaking the 200-day. And then Amazon's another one might break the 200-day. Netflix sitting right at the 50-day, but failed breakout, and from failed moves come fast moves. So that's just something to be aware of. And then Meta was holding up, but again, just failed breakout. So case of too tight for too long potentially and losing the 50-day. So definitely a lot of carnage in tech stocks, but there are a select few that are holding up. I hope like I can show you guys the ones that we're tracking that we think are holding up. So it should be an interesting week. Let's take a look at the economic calendar for the week. CPI on Wednesday, that's going to be a market mover. Initial jobless claims on Thursday. And then earnings wise, pretty quiet. You got Adobe, Oracle, and then that's really the notable ones. The earnings are starting to wind down, so pretty quiet on that front. So I think that's going to wrap it for the weekend walkthrough. Um, yeah, as always, like to hear from you. If you're interested in becoming a client, you can always reach out. My email is connor@revereasset.com. And then I'm on Twitter at ConnorJBates_. And yeah, that's going to wrap it for the weekend walkthrough. Hope you guys enjoyed and good luck trading next week.